Many people complaining bank loan application is troublesome, and mostly ended up with rejection. Why? It's only tough if you don't know what's the bank want. Good news is it can be learned. Before any loan can be approved, it has to go through 5 C's of credit evaluation. The 5 C's serve as a structured way for credit officer to process a loan application. The first C is character. The most obvious character of the borrower is their age. Age is often associated with a person's maturity. If borrower is too young, they might not ready to commit to a long-term financing. Age also direct related to mindset. Obviously, the higher the borrower age, the riskier for bank to finance. They can just call it a quit and goes into bankruptcy. People says by looking into a person character, they can guess roughly what business they are doing. An OB or nature of business is important for banks' market segmentation. Some businesses are categorized as a void industry segment, which the bank kept its secret from public knowledge. And banks also have their targeted industry segment as well. Eventually, individual bank can change their avoid segment or targeted segment from time to time whenever needed. Most of people know what CCREASE report but only understand 10% of it. Bank rely on CCREASE to perform credit scoring. Bank's credit scorecard consists of many indicators and 70% of it make reference to CCREASE. Those who know how to translate CCREASE will able to establish the borrower's creditworthiness. These are only 3 examples of character evaluation under 5 C's. And of course there are more. Character of a borrower is hardest to judge. There are no exact measures to determine good to average or bad borrower. The second C is capacity, which involve calculations on borrower's eligibility. Before bank takes in borrower's income as good, they have to make sure the income is stable and consistent. How much income derived from business is determined by industry's factors. Different industry will have different income factor. Whether a business will be profitable or making losses will depends on how they manage their cash flows. One of most common ratio you might heard of is debt service ratio or DSR, while bank uses many other ratios to calculate borrower's eligibility. I believe we can cover financial ratio calculation in our next video. Let's proceed to the third C, which is capital. Capital also view as other means to repay the loan should income of the borrower interrupted. A borrower with a lot of capital does not mean they got net worth. Net worth is calculated after deducting loan outstanding from assets value and haircut on risky investments. Different banks got different credit policies for special approvals, which we will discuss it on our next advanced credit evaluation topic. The fourth C is collateral. Collateral is the bank's security for granting a loan. Primary collateral, or sometimes we call it first ways out. The bank first way out is to recover the loan from the borrower himself in case the financing turned bad. If first way out failed, the bank will resort to second way out, which is to obtain court order to liquidate the security of the loan. The second way out is not so preferable due to the lengthy process of recovery. The last C is conditions. Conditions refer to the terms set in the loan or even any economic conditions that might affect borrower. Banks set conditions mainly based on the purpose of the loan. For example, if the purpose is to buy a property, the loan only can disperse to the property seller. Business loan only can be used for business purposes. The money will only goes to intended parties for the purpose stated in the conditions of the loan. Therefore, conditions is also called control. The 5 C's is the basic framework of credit evaluation for all banks. It has been built into Pride BIS system to secure highest approval rate. So far it is proven to be effective even for those without any credit banking background. Hopefully we will have the opportunity to get a closer look into the PIS system in our next video. Thanks.